You're listening to Top Dollar, a podcast focused on giving people meaningful knowledge in the financial world. My name is Andrew Eisel alongside Wesley Young, and we are your co-hosts, providing you with our insights on trades you should consider, financial news, and everything in between. Thanks for tuning in. Okay, and we are back with episode 3 of the Top Dollar podcast.
Yep.
We want to mix things up today. Instead of talking just about the market and some picks we have, we said we were going to talk about all things finance, and one major problem that could arise in the future is colleges and whether they're going to open or not in the future.
Yeah, and how they've been impacted from the coronavirus and the downturn in the market. So we're going to go into a little bit of a deeper dive into that today. And
yeah, not only just colleges in general and their education budgets and stuff like that, but we're also going to dive into how mostly college football is going to impact their budgets and how much money they're going to be owing and stuff like that, and how financially it's going to hurt them,
and how much revenue they could possibly miss out on if there is no fall
and the
semester.
cities that they're around them.
Yeah, correct.
So well, go ahead. You can start it off.
So I was doing some research about some college football revenue and how much money they actually make in revenue from these games throughout the fall semester. And for the number one college that makes the most revenue of $219 million a year is the University of Texas. And, I mean, that wasn't a huge surprise to me.
Texas loves their football for sure.
Exactly. And number 2 on the list is actually Texas A&M with $212 million. So, I mean, these schools aren't, like, the best in the college division, but they're still raking in a huge amount of revenue.
Yeah, they're definitely the most supportive fan base. I guess that's it's very arguable depending on who your favorite school is, but they bring in the most money.
They have a large audience as well. So if they miss out on this revenue in the fall, that could mean a whole slew of problems for them for the following year and years to come.
Yeah, not only are they missing out on that revenue, if you're looking at the economy as a whole, not only are they losing ticket sales, but then those ticket sales aren't going to other places like StubHub, who the resale market is going to be hurt.
Yep.
Not only that, you're going to have jobs that are going to be lost for maintenance working, food workers, people who are handling parking. Parking is a huge thing because that's one of the things that isn't super regulated, and that's where a lot of income comes from.
A lot of their revenue.
A lot of the revenue is generated from parking. So if they don't have parking, that's a lost opportunity. And then
I think that a lot of their extra revenue from these football programs goes towards scholarships and recruiting and stuff like that.
Oh, for sure, yeah. Yeah, that's a big thing. And not only just recruiting football players, just looking at Penn State in general, I can guarantee there are people who go there because of that football atmosphere, that the camaraderie that everybody has in the football stadium. People want to be a part of that, and if that's not there, not only is that going to hurt the football program and all the money that brings in, but it's going to hurt people who are wanting to go to that school in recruiting new students, not just football players.
And I also want to take a look at some of the other names on this list that I was looking at. Ohio State is number 3 with $205 million. University of Michigan is following, and then the University of Alabama with $177 million in revenue. And I mean, Alabama, they're obviously known for their football program too.
Yeah,
so
they probably get some money for going to the national championship every year.
There's a lot, exactly, and there's a lot of other aspects that many people don't take into consideration about, like how other people make revenue from the football season. Me and Andrew were talking about hotels, how hotel sales in college towns are
and not even just college towns. I mean, the Marriott in Altoona is sold out when Penn State has a home game because people from all over the state are trying to get as close as they can to watch the game.
And then like the local bars and restaurants too, on the weekends that they have those games, they're really seeing a lot of traffic and stuff. So if there is no
total
fall semester, that could it could have a huge snowball effect and affect many different kind of people that
Yeah, and
depend
not
on
only just football, but if you see a delay, reports have come out where colleges are looking at contingency plans that they won't have classes until spring of 2021. Then you're losing basketball season. So for your Kansases, your Dukes, your UNCs,
those bring in huge.
They're
amounts
not
of
huge
revenue.
football powerhouses, but they are big time basketball schools, and they lose out on that revenue. It's really going to hurt.
Yeah.
And most other sports at colleges operate at a loss and get their money from the extra revenue generated by football and basketball.
Yep.
So I think everything's going to be hurting just in the sports industry alone. ESPN, I read a tweet today that overall this stoppage of sports has lost $12 billion in revenue, which is crazy.
And that's an insane amount.
And I didn't read the entire thing, but I don't know if they took into account just ticket sales losses, or maybe they took into account, like we said, parking, food operations, media coverage, TV
media
deals.
coverage is the huge thing as well.
I mean, you think about ESPN, what they had.
That's their whole thing. It's all it's all sports.
Yeah, I mean, I turned on ESPN. They had the 1997 National Spelling Bee on. Come on, are you kidding me?
Yeah, they're definitely hurting them. NBC, some of those other broadcasts that have college football, they could be missing out here this fall, which isn't good for
definitely
them.
missing
And then
out.
I think that'll definitely affect, going back to the stock market, some of their stock prices as well. Disney owns Fox Sports and Fox, and they've been seeing
What don't they own is the question.
Yeah. And I also want to take a look at another impact of no fall classes. Many colleges, many of the towns are built around colleges. Like you have Downtown State College, you have Chapel Hill, North Carolina, and Gainesville, Florida. These places are all built around the colleges and all the revenue that these students bring in.
State College was a farmville.
Yeah,
exactly. I think the population of State College is almost as big as the school. It's pretty similar. Penn State's about 40,000 students.
Yeah, plus, yeah.
And State College alone is almost that big.
Yeah.
So,
and I think some of the people that own the restaurants, the bars, those kinds of on the in the town kind of areas are seeing a huge miss of revenue, not only from the spring semester being canceled, but if possibly the fall is canceled as well.
And right now, at least in Pennsylvania,
huge miss.
I don't know where you're watching. Some restaurants are reopening, but a lot of places have taken a huge loss because they can't generate any of this revenue. And if you try to hold them out even another fall semester and say, hey, you can open, but colleges won't be open, I can see a lot of restaurants closing.
And I saw this stipulation where they said that, you're allowed to open your restaurant, but you're only allowed to have 25% or 50% capacity, for that.
Yeah, that's ridiculous. You can't do that. And some restaurants operate with a small area.
Exactly. And I think that for restaurants, they need to have a lot of people always in there. That's how they generate a lot of their income. And
operating at half capacity, you fill half of Beaver Stadium. There's going to be a lot of angry fans. Ticket prices would be through the roof because they're already expensive. You cut that supply in half. Yeah. Oh my goodness. You'd be lucky to see a game.
I don't know if that's going to change student tickets, not only for Penn State but for other universities as well. Because I know a lot of universities, they give out those student tickets and have big student sections. So
yeah, Penn State delayed their season ticket sales first. Student season ticket sales, that is via PSU Barstool. I saw it on there. Whether that's 100% credible, I'm not sure, but I did read it and they did post that, so we'll relay that information to you. And not only are colleges going to be impacted on a sports and athletic level, they're going to be impacted on an educational level and stuff to do with online schooling and stuff like that. So many schools are not decided yet on whether they're going to come back in the fall.
Yep.
A couple schools are, and down south, and
a lot of them are.
Yeah, so a couple schools are Baylor, Texas A&M. Like we said, they're big with football.
They need that.
Yeah, they need that.
They need
and
that
then you
200+ million.
You have Texas. Brown and Harvard said that they are going to plan on returning, and Harvard is a big one. I truly believe that a lot of schools follow what the Ivies do. Think about it. The Ivy League was the first basketball conference to cancel their championship.
And then everyone followed
And then everyone followed suit. And then Harvard said, hey, everybody's not coming back in the spring. And everybody was like, whoa, what's going on? Why? And then what happened? Even high schools across the country closed.
Correct.
So I think that's really encouraging to see. Depending on what side of this you're on, it's very encouraging to see Harvard saying that they do plan to resume fall classes.
Yeah.
Because if they are, then everybody else is going to follow suit. It's
most likely.
In this manner, it's almost kind of like a domino effect. Once one school does it, all the other schools are kind of like, well, we don't want to make the wrong choice here. And if two people are doing two different things, one of them is going to be the right and one of them is going to be the wrong. And
correct.
I think a lot of these deans at colleges are more scared than anything. And then you have Alabama, North Carolina, who also plan to return in the fall. And this isn't set in stone, though, because if their local governments say you can't go, there's nothing they can do.
Yeah. And I think that, a lot of this is still up in the air depending upon if our economy starts to open again and we see a resurfacing of cases more than what we expected. They may end up saying, hey, due to the new information we have, we're going to be closing for the fall.
Yeah.
So I think it's still, some of it's still up in the air.
Yeah. It's definitely all up in the air. The biggest fear right now is the fear of the unknown. Nobody knows how this is going to unfold.
Yep.
Vaccines could slow down. You don't know how that's going to turn out. You don't know how students are going to respond to coming back to school. You don't know what if there's a breakout in campus. There's so many variables right now that have never been explored before because nothing of this magnitude has ever happened.
Yep.
And talking about schools itself and their loss in revenue, our school that we're going to is Penn State, and they could lose an estimated $80 to $456 million in its education budget.
That's a wide range, but that's still...
Yeah, and that's if they don't reopen in the fall. And you have to think, are they going to be getting students that are online, people who are online, and they say, well, I don't know if I want to come back to school because...
a lot of people, I think, have this mentality, too, that I'm paying X amount of money for just an online class, for online classes.
Yeah, you could go to University of Phoenix online for half the price, and it's the same thing. They've been doing that for years.
Exactly, and I think, that's definitely something that a lot of people are considering, too, and that could have a bigger hit on universities than some people might expect to have happen. So
yeah, I think the level of expectation might change too, and not only that, you're having a lot of virtual tours and stuff. And I've went through a couple of the virtual tours. I'm sorry, it's hard to sell me on something
when you're not actually there,
looking through a screen. It really is. And I think they might lose out on a lot of new admitted students because of this.
Yeah, they might see admissions decrease, which could lead to, obviously revenue decreases as well.
And I think the schools that are going to take the biggest hit are small liberal arts schools. They rely solely on tuition to keep their schools running, which is why liberal arts schools have a much steeper tuition than state schools, because state schools obviously get money from the state.
Yeah.
But if those schools are losing out on new students and they're having to pay back money for room and board, and they're not having students live there eating every day and commuting on buses,
and not paying for that not only tuition but for like the room and board and what you were talking about, they're definitely missing out on a ton of revenue.
Yeah,
and if there's no football season, there goes even more lost revenue.
Yeah, if you kind of think about it, it's like taking a city, and a city is thriving and very prosperous, and all of a sudden you take away everybody half the people who live in that city. This city is not going to be the same.
The demand has just become non-existent at that point.
Yeah. So, then you have price levels fall, and then pretty soon you have wages fall. Just the whole structure of everything. The whole structure of every major college town, campus, and everything alike is being ripped away. And once you take that structure away, things are going to fall apart inevitably.
So, I think that, we might see a bigger push in the coming weeks to months of colleges wanting classes open in the fall.
Yeah.
So we might see
and those residence halls like we were talking about, if you think about it, you can't leave a residence hall unattended for how many months? At some point you're going to have people working in there to keep it updated. You're still paying, income taxes on all the land and area that you have. If they do have a big football stadium, that's got to be kept up. You got to have people working on that.
Yeah, there is a lot of upkeep with running colleges, especially. So
yeah, and well, to finish up on that, liberal arts schools too. I think some schools, maybe not immediately after this, but a lasting impact of this is that they will have to close down many years before they thought they were going to. I think a draw for many liberal arts schools is like that small classroom feel. Hey, you come here, you'll know your teachers, you'll know this person, you'll know that person. The liberal arts schools with small class sizes are all about those peer-to-peer connections. And if you go online, you take away one of their biggest selling points.
Yeah, exactly.
Which is another reason why people may not choose to go there. Then they might choose to go to either somewhere cheaper or something like that,
or like a less expensive online class. If that's what they're forced to do.
Yeah, and the economy as a whole has what you were looking up some stats with the GDP. How much did the GDP fall in the United States?
All right, so I was looking up earlier I was doing some research about GDP, how much it's decreased for the quarter one and stuff like that. So the U.S. is reporting a contraction of 4.8% in GDP.
Wow.
So many people think, 4.8%, that's not a lot. 4.8% of 20 trillion we're talking about, because that's the United States GDP roughly, which is a monstrous number. And it is the first quarter one GDP contraction in 6 years.
Wow.
So that's another big
so
point.
Just the GDP, which is used to measure, if you're looking at per capita, you're looking at kind of a measurement of what the average American family owns and what they have, and they put it into a number value to associate it with, how much they're worth. So you start to lower the GDP of some of these families, the ones that were on edge about college, that say, hey, we can help to pay a little bit, we can afford to take out a loan, we can afford to do this.
Yeah, when the economy was really healthy and thriving.
Yeah, once how many Americans filed for unemployment? 30 million, something like that.
Close to 30 million.
If you have a mom and a dad that just lost their job or are going to lose their job in the future, they say, hey, we can't help you out with college. We might not be able to co-sign on that loan.
Yeah.
And you're an 18-year-old kid thinking about going that much in debt. You might go away from, either
shy away
from college, which is another lost revenue that they're having.
And that's directly related to the economy too. So
yeah, it's kind of it's cool in a way, but at the same time, it's kind of scary that everything is all interconnected. It is one big web. If one part of that web falls, everything else is gonna start to deteriorate behind it.
Tumble with it.
And it's not something you usually really think about all the time. You think, well, college is kind of its own thing, but then you think about all the people that work for colleges, and those people that work, they have families, they have to feed their families. The whole thing is just one big running machine, and right now, I'd say it's running on fumes.
Yeah, it's not looking good.
It's super overvalued, correct?
What, the market?
Yeah.
Yeah, I was reading this article, and it said that the S&P 500, which, if you don't know, kind of tracks most of the market and some of the biggest companies.
It takes the 500 biggest companies and puts them all in one number, because a lot of people say the stock market is not really a good beneficiary to say how well the U.S. economy is doing, but it's kind of the closest thing you have to putting a number as to how well the U.S. economy is doing, because you can't really say, oh, well, the farm industry is doing great, but the technology industry is going down. So how do you really? It's like comparing apples and oranges. So, but anyway, I digress.
So as Andrew mentioned before, we were talking about the overvaluation of the market, and I was looking at it, and on average, the S&P trades at 13 to 15% PE ratio, which means that in general, people have a very positive outlook on the market and what they think the market looks like in the future, because a lot of people trade for future values, meaning that I'm going to invest now, this company grows, and I'm going to take out my money later so that I have more when I retire and stuff like that. Currently, though,
optimism.
Exactly. And currently, the market is trading at 20 times a PE ratio. So people right now are overly optimistic about the market. And I say overly optimistic because we're going through a time where our GDP is decreasing. The quarter two GDP is set to decrease even further than the quarter one. So I think that people may be a little bit over optimistic about the market right now, but
yeah, they're kind of overestimating its value, which could be a bad thing. Optimism is usually a good thing, but at what point are you overestimating something?
And now I think that some people's portfolios might be at risk because of this. If they see that in the past month we just had the best month we had since what was it, 1987. So the S&P just reported the best 1 month gain since 1987. So I'm kind of contracting what I'm saying, but in reality, a lot of people invest for the future, and those short-term gains might only be in the short term, and if you're in it for the long term, you might see a slower growth rate than what is really
and I mean
happen.
At this time, like we've touched on, and anytime you refresh the news, the future is in doubt, and that's with everything. You don't know whether lives could be in danger, the economy could be in danger, and stuff like that. Everything's up in the air right now.
And when we see the market trading at 20 times what it is, I think that investors are anticipating a big rebound in the U.S. economy, which is obviously a good thing for not only employees but investors as well. Seeing if they're anticipating this big rebound, and over the course of the next year and a half it happens, then a lot of people are going to be looking well in the market. But if something if it's delayed longer and we can't open businesses and colleges until longer than what we expected, we might see some losses.
Yeah, and even farther drop. I think my perspective on it is right now the economy is at a state where it's like bend but don't break. And when I say economy, I'm talking about the stock market, because that's kind of like a visual of how it's doing.
Base it off, and like the
stock
right
market
now is how you make your money.
The government is just throwing money at the stock market to keep it from falling to really low levels. And they can only throw money at it for so long. At some point, they're going to say, "There's nothing left."
Yeah, it's up to you guys to get businesses running again. And
which is why it's paramount that these businesses, and we find what works for this, whether that's a certain type of mask or something like that. But it needs to get figured out soon, or else the economy is really going to suffer. Which I think, not to get too dark, could jeopardize some countries and the stability of those countries, because America relies heavily on the strength of our economy. That's that money is power, stuff like that.
Correct.
So,
and I think that a lot of people are eager to get back to work as well.
Oh,
so
for sure.
I think that once
my dad was itching to get out of the house once he finally once he got his job back.
And so based on that a lot of people are eager to get back to work. Whenever we open this economy up, I think that there's going to be a lot of a big green side to what we're seeing. So I just don't know when we're going to open it up and
if that's the right decision. I really don't think there is a right decision. When you open everything up, there can be a lot more cases that come out. You keep everything closed, the economy suffers. I'm glad I'm not making that decision, but
yeah, and I want to. So right now we're just going through quarter one earnings and stuff like that, and a lot of people are kind of being shocked by lower quarter one earnings than what was projected. Some of these companies were Amazon, which is actually down, I think, around 8% today. We're talking right now while the market has about an hour left in trading, but as of right now, Amazon's down about 8%. McDonald's and Boeing also reported a missed quarter one earnings, and the quarter one earnings was supposed to be a higher projection than the quarter two.
Somehow Apple gets increased earnings. Like, I don't understand them, man. Their company is crazy.
They are, and the quarter two earnings have a more dreary and dimmer outlook than the quarter one. So I think it'll be interesting to see.
Yeah, because quarter one kind of incorporated like time before the virus came out. So
it was from January to March, and now we're looking April to June, which is going to be like the heart of the closures and stuff like that. So I think it'll be interesting to see how companies, if they beat their quarter two earnings or if they miss, and if they miss, we're going to see, I think, a large pullback in the market. So
yeah,
if you're investing in the short term, I would
get out before the earnings come out.
I would definitely use more caution with the quarter two earnings than the quarter ones, which we've been working with before.
Yeah, and like we said, the economy is very interconnected on every level, and we took some notes and did some research on just the housing market too. 3.8 million homeowners delayed their mortgage payments, which is crazy. I mean, in 2008, most of the collapse of the economy was due to
those
defaulting, the housing market and stuff like that. So if you see people who are, keep delaying loans, keep delaying payments on loans for houses, I mean, you could really see a deterioration of the banking industry too. And some of these small banks that give out houses, they give out loans on houses and stuff like that. They won't be able to leverage things as much because they just won't be getting any of those payments back and stuff like that. So
and right now the Fed's kind of covering for those people that are defaulting on their mortgage payments right now. That's what's kind of keeping the banks operating like they should be. So something to take in consideration as well. But.
So we'll hop into our final segment of the day, one that we will hopefully keep up and running. Is our Buster Boom. To recap,
my favorite segment.
The score is 1-1. I won week 1 with Inovio, and Wes beat me this week with his pick of Anheuser-Busch. Do you want to explain why you think Anheuser-Busch won?
Sure. So I kind of talked about in the previous podcast why I think that Anheuser-Busch was a good buy for this week, and it kind of stood true. Anheuser-Busch was up I think 12% on Wednesday, whenever the market was doing really well. And then as of right now, for the 1 week trend, they're up 5%, which is actually not bad if, we see the market right now, it's down for the week. But I think that, the reason why it's up is, like I said before, people saw Anheuser-Busch trading at kind of at a discount and getting it a little bit cheaper than what many people think it is, and basing it off their Q1 earnings, which come out on, I believe, Wednesday. So we'll see what happens there. But
yeah,
if you're still holding,
it's a solid buy. I mean, last week when I was sitting here trying to tell you that Moderna was this, it was either a bust or a boom, and listening to you talk about Anheuser-Busch, I was kind of like, damn it, he's got a point.
Yeah,
people are gonna buy into that, and people want their beer, and that's never gonna go away.
That's a solid demand right there.
There's gonna be demand for that for
solid demand
until the end of human history.
Yeah.
So I want to get into a little bit of why Moderna, they were down 10% this week. Now, like I said last week, Inovio, the first week, could have just as easily fallen as far as that went up.
Yeah.
Any pharmaceutical right now is super, super volatile. And they didn't really do anything wrong. But actually today, as we're speaking on Friday, their stock spiked today because they just signed a deal with a company in, I believe, Switzerland or Sweden, one of the two.
Okay.
But they are going to create a bunch of vaccines for when and if they do get cleared, they can go right to the public, which is huge. So that's why you saw a big spike in their stock today. And really, they didn't make the news much this week.
A lot of those pharmaceuticals are news driven.
Yeah,
and you hear good news, everyone jumps in for a little bit, they drive the price up. Then they hear, like Gilead last week, their tests aren't working out, that everyone pulls out real quick. So they're really really fluctuate a lot in
I
price.
guess it kind of, you say, they're out of the news. How can it be bad? Well, I guess if you're not making good news, you're making no news. And when you're a company like that, you kind of rely your stock. I mean, they don't rely on it, but the stock price of their investors, they kind of rely on good news. And if you don't have any news, well, don't expect any big gains. So that's kind of why they fell. But if you're still thinking about trading into that, I would still be super, super cautious, just like with any pharmaceutical, and proceed with caution. So now to wrap up, we'll get into our week 3 picks here. Excuse me. My week 3 pick is Shopify. We have talked before on this podcast about how the e-commerce world is going to and is exploding at the moment, and I think there will be outlasting effects after this. I think the e-commerce industry will be much bigger, no matter what is being sold. And Shopify, if you don't know what Shopify is, it is a platform where you can create an online store to sell anything, like literally anything, and people can list their products and do things like that. And
I think that's a really good attraction right now, especially because a lot of the business that is being done right now is through online purchases and stuff.
Yeah.
So if you have a good idea and you think, I want to create a company right now, or I have a good idea right now, you can use Shopify to get you started off. And
I mean, people, they don't have a job right now. They say, hey, just got my stimulus check. What the hell?
Yeah.
Why not? I can try to, get out the old, get my daughter's loom bracelet out and start making bracelets. I don't know. But, they can start, I think there's like a base rate of maybe $30, $40 a month to start a Shopify.
Okay.
They take a cut of every sale, and that's how it works.
And
so
I think I've heard stories of people becoming extremely profitable off Shopify, and if they create a really good product or they're selling a really good product, Shopify.
Yeah, there's always a YouTube ad before it says, hey, don't skip this ad. Do you want to make money drop shipping? Stuff like that, all that garbage.
Is that what Shopify?
Well, Shopify, a part of it. There's a lot of drop shippers, but that's for a whole nother episode. But anyway, Shopify is trading at around $600 right now. They were up 78% in the last month. Now you might say, hey, they're overvalued, but really, like we said, the whole market's kind of overvalued. And if Buster Boom is a short-term play, we're working within the week. Their earnings come out on May 6th, and I think, which is on Wednesday. And once their earnings come out, if their earnings are anywhere close and over what they were projected, their stock price, I think, is going to see a significant increase,
Definitely.
proportionate to how much their earnings were. And like I said, I do expect their earnings to be up. I think Shopify and demand for e-commerce is going up. So I think a lot of people are not only going to be buying from online stores, but trying to sell too. And Shopify, it's a double-edged sword. One side, they're getting money from the sellers, and then the other side, they're getting money from the buyers, because like I said, when somebody buys, they get a cut, and it's a credit card fee.
Yeah, I really like that pick you had. I think that they have a good
selling you on it.
They have their quarter one earnings may be a little bit higher than what some people project. So
yeah.
So I guess it's on to mine now. Mine is my Buster Boom pick for this week is Activision Blizzard. They are a major video game development and publishing company, and they have a market cap around $50 billion. So they are
they make all the Call of Duties. If you're wondering, Activision, Call of Duty.
Yeah, they make a lot of the Call of Duties, and they make some other games. And I think that a lot of people, have been stuck at home. I think they're playing their games. I think they're buying their games. So I think so right now, I was looking at their stock price, and for their 52-week range, it's 68 a share is their max, and right now it's trading at 64 a share. So they are trading pretty high, but I think that if they report a good quarter one earnings that come out on the 5th, that they're going to see a big jump and may exceed that 52-week high and push up into the low 70s. So I think it's a good short-term play, definitely. They haven't really seen a large pullback like the rest of the market. They did take a little bit of a hit in March like everyone else, but they quickly rebounded, and now they're trading back to their 52-week high. So I think this is a good, strong play, and I think they show a promising future as well with their company.
Yeah, I think that's also a solid pick. I think these are they're definitely not as volatile picks as we've had in the past. They're not huge pharmaceuticals, but they're definitely picks that, I hope outperform Wes's to get up to one. But, we'll see what happens. I think they're both very, very viable options.
And they're
I don't know how much your bankroll is, because Shopify is $600 a share, so that's kind of out there.
Yeah. But both of these stocks are tech stocks, and tech is either really driving the market or it's lagging the market,
pulling
down.
It back a little bit. So
I guess we'll see what happens. But
yeah, so I guess that wraps up episode 3 here.
Thank you guys for tuning in. Remember to follow us on Instagram at Top Dollar Podcast.
Yeah, every episode we've kind of tried to upgrade our quality a little bit, do things a little bit differently.
We're posting stuff on there about what the market is doing at the current times. If you have a busy schedule or something, you can just hop on there on our page and click on our story. We have updated some tickers and kind of what we talked about in
you can follow the Buster Boom action, who's winning that. And we'll post frequently about our upcoming schedule, maybe if we have any guests coming on the show, interviews, stuff like that. So we're excited, and thank you for tuning in to episode 3, and we hope to have you back next time.
Yep, next Sunday. Thank you.
Thank you very much.